Hey, good morning, everybody. Welcome to the live trading room. But today, the live trading room is, we don't have a live market, okay? So we have a little bit of stuff going on in the futures market, but the equities, options, those markets will be closed today. They'll reopen. The futures will probably become more active a little bit later on today. Just wanted to come in today. I got up early. I kind of forgot about Monday being closed, and I guess I could have used some extra sleep. But anyways, Daniel and I were talking, and I said, let's do a little bit of a commentary on a pre-market routine. Let's walk through some of the things that we teach here at the Elite Trade, and how we kind of go around starting off our trading day, and what are the things that we look at, what are the information that we collect in the pre-market. Now, keep in mind, Kaitlyn does a lot of this in the pre-market for each one of our live trading sessions, and I want to kind of give you a glimpse into all the hard work that she puts in order to prepare our students for how do we visualize what's going to happen the rest of the day, okay? And there's so much of that information that we collect in the pre-market that can help us get the right mindset. A lot of these things are mechanical. They're very specific in what we look at, so that you can make a decision. Is this the type of trading market that's going to fit your trading style, okay? This is very impromptu. Okay? It was just kind of like, there's no slide deck. There's nothing like that. I do encourage everybody to use the chat, ask questions, and then we will repost this recording for everybody to see, okay? And I'm going to make this available to the public, so anybody that wants to come in, kind of understand a little bit more about what we do in the live trading room, please check us out. You can go to the elitetrade.com to get more information on that. So again, this is just kind of a give back to the students, to everybody that is in our live trading room. It is an open forum. Please ask questions. If you want to learn more about it, come visit our website. But before we get started, let's do our disclosures. We're not doing any live trading in here, but what we're doing is information gathering. But in our live trading room, much of the time, we will be using a simulated environment, using real market data, real time. And we encourage everybody that is just starting out to not trade the live capital or real capital until they feel comfortable in their own risk and in their own environment there, okay? So information contained within this presentation should not be construed as a recommendation to buy or sell or any security or any financial instrument. Additionally, the information contained within this presentation does not imply the suitability of any investment strategy. What we're doing here is gathering information to see if this environment is safe for us to trade, if it fits within our trading parameters, and to really manage our expectations on what we see things going for the rest of the day. We're not licensed brokers or investment advisors, and all attendees of this presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice in appropriate investing or trading trading strategy. We are using real-time market data. We'll execute trades in a simulated account during presentations, okay? Again, so much of what Kaitlyn and I do here is to educate people on the picture on the price chart, but a lot of times the picture on the price chart can lead to a potential strategy. And strategies to include whether we're inside or outside the prior day's trading range, whether we're going to have an aggressive trading environment or we're going to have a kind of quiet trading environment. All of these things need to be considered as we are building out our day. And as we put this pre-market routine together, everything must be a piece of information that you can go back and verify and research and validate the validity of what we're teaching, okay, and sharing here. So our pre-market routine, okay, and part of our strategy here is to have certain pieces of information, like what's in the news, economic reports, whether we have breakout trade opportunities, okay? As we set up today, we will be going through much of that pre-market routine. Now, for a much more detailed pre-market routine, we do have a couple of courses on our website that you can get the handouts, you can get the very specific details of what we're looking at, okay? And I also want to remind everybody that this is an open forum for everybody that is attending right now, and please ask questions. I will repeat the question for the people that are, for everybody that is watching this presentation, and then I'll answer the question there, okay? You guys ready to go? All right, so I will be filling out this form, okay, throughout the day. Now, for our students that are going into the live trading room tomorrow, the June 21st, we will be coming back from a long weekend, okay, where we had basically the 3-day weekend here, Father's Day and all that fun stuff going on. So we have to anticipate, how does the market typically react the first day back after a 3-day weekend or a 4-day weekend and so on, okay? Much of the time, banks and institutions are hedging for an offsetting risk, okay? When it comes to a day where the markets will be closed, typically the day before, just after the morning session, okay? So let's just say it was Friday. After about 11 a.m. Eastern on Friday, the markets really got quiet, did not do a whole lot, okay? Now, when we come back from this long weekend or a holiday, and this happens very typically as the banks are hedging for the over the weekend risk, is that they need time to unwind that hedge and get back to business. So the Friday before, of course, in this example, Monday's closed. On Tuesday, we have to anticipate that whatever the market has done outside the regular sessions is that large institutions and large traders are going to be coming back to say, okay, what's the environment? Do I take that hedge off, or do I leave it on for just a little bit longer till things settle down? Often, if there's a big market, if there's a big reaction in the futures market because of an event that has happened over the weekend, we may see that there are some additional volatility that's going on as we open up the first part of the session after the long weekend. So having said that, okay, so far, nothing has really major been sticking out on the headline news that has been standing out. Good morning, Daniel. Glad to have you here. So let's take a quick look at the chart. I'm going to jump right in, but I do want to imply that, or impress upon you, that when we do have these long weekends, that we have to allow the market to kind of open up and unwind the first day it comes back, okay? Now, if we take a look at the calendar, I also want to point out here that, so Friday was the 17th, and I'm just going to keep this kind of real time here. Friday was the 17th, where after 11 a.m. Eastern, the markets got really, really quiet. And we had to go down really small time frames to see if there was any trading opportunities, okay? But the Wednesday and Thursday prior to were very volatile, big moves, as traders were slapping on that hedge for the long weekend. So on the 21st, again, we have to imply, or we have to understand that whatever was going on the 15th and 16th, okay, the hedge that was put on will have to be unwound on the 21st, and then they can go right back to trading. In this example, okay, the 17th was the third Friday, and it was the last final options expiration for the quarter, the second quarter. Okay, it was contract rollover, last trade date for equity index futures. So as we start going into the final part of June, we also have to keep in mind that there's going to be much window dressing as the mutual funds get themselves back in compliant before the end of the quarter. Now, going forward, we're going right into another holiday weekend, July 4th, okay, 4th of July. So there's going to be much volatility, probably on the 29th and the 30th coming up. And then after, on the 5th, they're going to have to unwind that again, okay? This is going to be a slight different time because this was the end of the quarter. We just in the prior couple of weeks doing window dressing, okay? And right about the 11th of July is when some of the major companies are going to start coming out and announcing earnings. Now for earnings, the first 3 weeks, typically the top 400 of the S&P 500 will be announcing earnings. So it's a very volatile, very shifty markets, okay? And with all the other news and drama that we have going on in the marketplace, we can expect a large amount of volatility. Now, it is also important that each quarter, as we line up for end of the quarter, window dressing, and a new earnings season, is that we compare quarters to quarters going forward. So last quarter is not going to be the same as this quarter. But year over year, if we start looking at the end of the second quarter, beginning of the third quarter, we often find that this environment is very productive for you to be trading in, or it is very scary to be trading in. Now, for me personally, July has been some of the worst trading months of my trading career, okay? Now, there's no rhyme or reason, but it just has, the things that I've documented have been earnings season, end of the quarter, window dressing, 4th of July, and there's a lot of things that are consistent that help me rethink, do I need to be very, very defensive if I'm going to trade this market in July, okay? Do I shift down to smaller timeframes, or do I keep my focus on large timeframes? Do I focus more on the equities, options, or do I focus on active income trading, maybe using futures or the FX market? All of these will start you as a trader that's going to have any longevity in their trading, is you start to document these events and these things that are happening quarter over quarter. So for me personally, I've become a lot more reserved in July, only because in the past several Julys, I have not been as productive as I would hope to be, okay? So keep these things in mind as you are collecting information for a pre-market routine, is to understand which environment that we're getting into. And we are, just like the lunchtime doldrums, we often have the summer doldrums. Now, why do we call it? Well, we call it summer doldrums because things get quiet, kids are out of school, graduation has just passed. I mean, there's a lot of little things that we can hang on, but not one single one of those is what has made the market go up or down, okay? So gathering all this information, we have to understand where we are in the quarter. Are we at the beginning of the quarter, end of the quarter? Are we window dressing? Are we starting an earnings season, okay? So I don't want to ramble on here. I just want to make sure that as you are watching this video, that Kaitlyn and I consider so many things that are outside the price chart to help us navigate that price chart, okay? So I'm going to start off with the S&P as we kind of go through this. Now, I've set up a little bit of this already, okay? And some of the highlights that I focus on is where is the prior session's high and the prior session's low, okay? Now, having a good understanding of where the prior session's high and low is a market environment odds enhancer, okay? Now, for Kaitlyn and myself, if price today, okay, and let's just label this. This is the prior trading session, and this is today. So what we want to see with using the prior session's high and low is today, the price range from high to low, the Globex high and low, is it inside or is it outside the prior session's trading range, okay? Now, if it's inside, we kind of become a little bit more defensive and we become a little more, well, we start looking for smaller moves in the market, okay? Now, when price is inside the prior day's trading range, often the environment is a little more choppy going into the regular session, a little more difficult for trading. It's range bound, not trending. So when we take that piece of information and say, okay, well, the Globex high and low is inside the prior session's high and low. What does that really mean? Well, it means the environment's going to be a little more difficult for trading. Taking a breakout trade is often very high risk because the markets are not trending, okay? And this can be a very difficult environment for new traders not understanding that we're really just chopping sideways, okay? Now, we have to anticipate if this chopping sideways is on elevated volume, okay, that there might be banks and institutions that are processing orders. After all, going out to a little larger time frame, just to demonstrate this, is that when price is in a tight range, that is often when the banks and institutions are putting orders together, okay? And when the market is trending, it's generally a lack of buyers or a lack of sellers that gets the bigger price moves, okay? And also in the same instance is we have periods of when the market is expanding, trending, and we also have periods where the market is contracting or consolidating, okay? So expansion, contraction. And we have to understand that rhythm that's going on. If we look over the last couple of days here, we can see that the market was expanding to the downside. And then as it like expanding to the downside, and then it went into correction, expanding to the downside in one day, and now we're in a correction. So impulse, which are bigger moves in the market, contractions are when things are in a tighter range, okay? Now, here at the Elite Trade, Kaitlyn and I have put together the leg-based group of candles to help us understand when to have a buy territory or sell territory to take action on a trade, okay? So on an inside day, okay, or when the market, when today is inside the prior session's high and low, we look for leg-based group of candles in order to execute a trade, and we don't take the breakout trades. But understanding if we do take a breakout trade, we are taking on extra risk, okay? So I'm going to use this as an example, just to kind of explain a few topics about why do I mark the prior session's high and low. It's just a reference point to tell me whether this environment is very aggressive today and trending, or if it's going to be a choppy day. Now, that doesn't mean the whole day could be that way, but at this moment in time, if everything is choppy and sideways, how would I assess my activity in the market? Would I be more aggressive, jump in, jump out, or would I be more reserved and kind of kick back and say, okay, time to wait until I have a solid setup, okay? Now, we also mark the Globex high and low, and the Globex high and low is meant to be another strategy to help me understand that a sell territory or buy territory outside the Globex high and low can also be an opportunity to make a trade. Okay. Now, having said that, we want to take the distance from the Globex high and the Globex low. Okay. So I'm just going to use a trend line to demonstrate this. Okay. So on this trend line, I want to put a price range on that. And I could say that from the Globex high to the Globex low was 47.75 points. Okay. Now, what does that number mean to me? Well, I take that number and let's just add, I can do that on a daily chart. Let's do that. I can come over to my daily chart that I reference as well. And on that daily chart, I can look for the average true range. Okay. The average true range is the range of the last 14 candles on a daily chart. Right now, we have a number that says 104 points. Okay. So the average range for the S&P futures, okay, has been approximately 104 points based on the time of this recording, okay, over the last 14 days. Okay. So, all right, just a piece of information. But as we come over and look at today's range, we see that today's range is 47, let's call it 48, okay, compared to where the normal range or of the last 14 candles has been approximately 104, okay. When we have the Globex high and low marked, okay, we look for a sell territory above the Globex high. We look for a buy territory below the Globex high. This turns into a strategy. Now, we have some certain parameters around a strategy. For example, if today's range is equal to or greater than 75% of the daily average true range, then we would be more aggressive to take a short trade above the Globex high or first sell territory above the Globex high, or we would look for the first buy territory below the Globex low. So right now we can see that using a strategy such as the Globex trap is not warranted today. Why? The average range is 104 points. We have 47.75 points on the S&P documented right now from the Globex high and low. That's only about little less than 50% range, Globex high to low, of the daily chart. Now, if this number was 75, 85, 90% of what the average range is, we would be more aggressive to take a short trade as it breaks above the Globex high going into a sell territory, or breaking below the Globex low going into a buy territory. So we're looking at a combination of pieces of information here, okay? These are strategies that have been employed and documented for many, many, many years. I remember the first time I went to Chicago Board of Trade, okay, and went to the Mercantile Exchange, and not the Merc, but the went to the trading floors in Chicago. Now, up in the observation deck, you can look over and see all the pits, the bond pit over in one corner, you know, and all the little trading hubs out there, okay? In that observation deck, okay, there was all these pamphlets. And I'm going, oh my gosh, free information. But nobody was picking up these pamphlets. As I picked up one or two and started looking through them, these were trading, they were demonstrating clearly in printed form a trading strategy that all these guys on the floor used as a reference point. And they often referenced whether price was inside or outside the prior day's trading range. But they also made a reference of the Globex traps. What's a Globex trap? Well, simply the Globex is just a computer that matches tickets up in the futures market, okay? Every trade goes through the Globex system, every trade of futures, okay? But in the industry, we commonly refer to the overnight or extended hours session as the Globex high and low, okay? The overnight session. So having said that, understanding that the Globex is just a computer system, okay, that matches all of our tickets, but in the industry, okay, traders reference the Globex high and low as a price range for the specific reason of understanding that if price breaks above the Globex high, often traders start to become very bullish and start rushing into the market. Market's going up, okay? Or if it breaks the Globex low, people are looking to get out of the trade or fear, and they're looking to sell short. As traders using our buy territories, sell territories, and using the leg-based group of candles, we look for a sell territory or buy territory outside the range of the Globex high and low. We accumulate that information to say, oh, if the Globex high and low is greater than 75%, that range is greater than 75% of the daily ATR, then the Globex trap is a very high probability strategy that may work more favorably in your to get your desired results. Okay, so the Globex high and low is just a reference point. It helps me measure the difference between the high and low and then compare that number to the daily average true range. Okay, if between the Globex high and low is greater than 75% of the daily ATR, then we are more aggressive to take a short as price breaks the Globex high going into that first sell territory above it, or breaking below the Globex low going into that first buy territory, okay? So just following up, prior sessions high, prior sessions low, to see if we're inside or outside the 5 days trading range. Another odds enhancer or nugget is that if we see where the prior sessions close or gap fill is using the prior sessions high and low, okay? We see where the market closed from the prior session, when the new session started at 6 p.m. Eastern, okay? And from 6 p.m. Eastern going forward until we get another session break here, this is today's range, okay? Now, couple of rules. If the Globex high and low is inside the prior day's trading session, okay, we call it an inside day. And on inside days, we understand a market condition is choppy and designed to take my money, okay? So a very difficult trading run. It's the first red flag that comes up and says, hey, you better be very careful, okay? Now, along with the inside day, breakout trades, like we have a whole bunch of sellers that keep coming in right at this level, okay? And after prices met that resistance 3 times or more, often a breakout trade is highly probable that they've taken out most of the sell tickets in this example and looking to move price up, okay? That's just a piece of information. On an inside day, we don't take breakout trades. Because breakout trades often just pop up a little bit and they come down and stop us out. Okay, they're very difficult for trading. So we have to wait for price to return to a sell territory or return to a buy territory in context of trend in order to execute and participate in that. Okay. I'm dropping a lot of pieces of information on you, and why do I mark the prior sessions high and low? Is because these are very specific strategies that I can focus on so that the students in the live trading room can show a profit and get a deeper understanding that these are just mechanical things. It's not my opinion. This is something I can use and verify the information, okay? And that's why I'm being very specific on this. Now, back to inside days, okay, where the Globex high and low is inside the prior day's trading range. You also see that I have the magenta area. Hi, Scott. Scott, the markets or the equity markets options are closed today. Okay. So so they're closed. So I kind of went into a teaching mode just to help you guys that are already active or want to do something today to come in and get a little extra education. Okay. So what we've done here is, this is kind of like Sunday night trading or doing our prep work. Exactly. Okay. Now, what I'm demonstrating here is to help everybody understand the amount of work that Kaitlyn and I do in the pre-market to help traders see that we're not just randomly coming in and say, oh, the market's going up, market's going down. That might be what you see on the surface. But as we're talking about all the places that I have highlighted on this chart, prior sessions high and low, it leads me to help me understand a market environment. It also leads me to understand that I don't take certain types of trades because they often fail, like breakout trades. And I also want to point out that here I have marked the prior sessions close and where we see the gap fill. Okay. So I use that last candle, the close of the last candle before then the overnight Globex session starts. Right here we have a session break. Okay. Now the difference between where price is trading right now and to that gap fill is seen up here in the net change. Okay. So right now at this moment with the information on the price chart, we can see that S&P futures are gapping up relative to the close of the prior session. Okay. Now, what does that mean? Well, on inside days, like what we're having right now, on inside days, gaps often fill the same trading day. So if the gap is going to fill today, while we're still inside the prior day's trading range, which direction would price have to go after the market's open? Okay. And as we can see right here, where price is trading at the moment to the prior session's close or gap fill, price would have to go down to do that. So as we're anticipating price to come down, I would start to look in any of these areas to where we could find that leg base group of candles. Okay. So, wicks always count. Okay. The futures market is still open, Lou. Okay, but we have to understand as well is that the futures markets are open, but the stocks over here are closed. As we understand futures products, futures price themselves based on the cash market. Okay, so futures are always following, they're never leading. Okay, so right now the cash market is closed, which would be the stocks or the equities on here. Okay, but we're still seeing futures trading. Okay, well, the futures market is open. I think it'll be open for another little bit longer, then it'll shut down and it'll reopen this evening around 6 p.m. Eastern. Okay, but understanding that the stocks are closed, okay, understanding the stocks are closed also gives us another piece of information. Understanding that futures follow something, they never lead. Futures products are a derivative that follows a cash product. It gives you the right to buy or the right to sell something in the future. Doesn't mean it's futuristic right now, but the public believes it is. That's all well and good. I'm excited for the public to believe that way because it provides information to me as an experienced trader as to what the public is thinking. Oh, S&P futures are up 30 points, market's going higher. then right after the session open, it comes down and fills the gap because we're gapping up inside the prior day's trading range. So somebody asked me in the chat here, can you show me where the gap is? Okay. So I'm going to use a horizontal line, and we just say right now, current price is 3,706. Okay. Now, from where we are trading now to where we have the gap, okay, or the prior session's close, the distance between there is what we would see on a gap. Okay. Now, one way to look at this as well, using this particular charting platform, is that we go to another chart that eliminates the overnight or Globex session, okay? And I think it's at ES.D, okay? So the ES.D chart will show you the gaps because it takes out the overnight session. So as we're looking at this morning session, okay, and we map the prior session's range, okay, so that was Friday's range, high to low. We can see that there's a gap right here from where price closed on Friday to where price is trading now, eliminating the overnight data. Now, this does trigger a lot of the way that people see the price charts as far as, oh, the gap's got to fill. No, it's a gap and run. Well, when is it a gap and run? When is it a gap and fill? Okay. Well, often if price is gapping and running, okay, we will see that price gaps outside of the prior session's range. Okay, in this case over here, we had the prior session's range. The next morning, price gapped outside and it kept on trending the whole day. Okay. As we find that when price gaps up or down inside the range, often the gap gets filled the same trading day. Okay. Now, these are little subtlety pieces of information that we gather over time as we document this trading environment. Okay. There you go. Does that help? Okay. So I like to, for my trading style, I like to see the information on the price chart of whether price was gapping up or down inside the prior trading range. Okay. So, and since we are inside the prior day's trading range and have not broken outside of the prior session's high or low, okay, we are expecting the gap to fill today. Okay. Now, of course, it is much better when the stocks are here to support us. We don't have the stocks supporting the price move. So this is going to be like an overnight session as we get started. But if we're gapping up inside the prior day's trading range, we anticipate that gap to fill the same trading day. So at some point in the day, I am expecting price to return back down to the origin of this move up. Okay. So I'm expecting price to come down and fill the gap sometime today. Now, of course, this is not 100% accurate, but 80 to 90% of the time, you do your own research. We have outlined a lot of information here to help you validate and verify the information. Now, why is it important to verify information on the price chart? Well, it's important to verify it and validate it because that at that point in time, that will become your information, not somebody else's information and how they see the market. You're going to make the association, oh, inside days, they're choppy, they're difficult to trade. Okay. Price gapping up or down inside that range, those gaps often fill the same trading day. Okay, so now these are little nuggets that are in your head to understand, well, hey, that car is not stopping, or that car is going too fast to stop at that signal. And I don't want to engage in the crosswalk until things are much more safe. Okay, so kind of a parable to go along with that to help you understand that picture. Okay, and then we often at the elite trade, we use breakout trades, and we use leg base group of candles trade, or when price comes back to a buy territory or sell territory. Okay, so one of our strategies now is out the door that we don't take breakout trades while price is trading inside the prior day's trading range. Okay, now I know I'm repeating myself over and over. These are very key and vital things to help you plan your day going forward. Now, how many of in the chat room here have ever walked into or opened up, sat down, started looking at things? I just don't see anything on the price chart that resembles my trading plan. This thing's messed up. And you get a really kind of heavy feeling on your chest, and you're kind of disappointed. A lot of things, it's kind of frustrating. Well, when that happens, often traders, newer traders, will trade 2 to 3 times more. Okay. So recognizing inside day, we're going, oh, hey, I can't take breakout trades, so I'm going to be sitting here waiting for price to go to a buy territory or sell territory. And if the trend is in my direction, I can stay in the trade longer. If the trend is against, or if the trade is against the overall trend, then I would wait for the buy territory or sell territory, but also manage my expectations that trading against the trend is more elevated risk. Okay, so I'm trying to keep this very mechanical, where you can document this information, and then you can verify that if this information holds to be true in your studies, how would you incorporate that information into your trading plan? Okay, so inside days, choppy, difficult, take my money. Okay, I'm not here for the market to take my money. I'm here to take money from the market. So if I know that the market is hyper defensive to take my money, could I stay on the sidelines for a little bit until a trade, very high quality trade, manifests? Okay. So I'm going to go over to the next chart. I have a tab for each one of the equity index futures, because there's information outside the price chart that I document, as well as prices or pieces of information on the chart. Okay, I'm going to maximize the chart. Okay, and I'll come back. We'll talk about the dead space and pocket of points a little bit later. Okay, so I have this buy territory that prices went into, came out, but it's obsolete. It's already been used. Can't use it anymore. Okay, so I'm going to take and mark where the highest point is on today's session. And this would be the prior session. Okay. So I take my horizontal line and I mark the highest point between the session breaks. And this would be to become my prior session's high. Okay. I take another horizontal line and I mark the high of today's range, anything to the left side of that session break. And I mark the low side. Now I've mapped the high and low. And we'll come down here and get the prior session's close. And then I'm going to grab this magenta line and I'm going to say, okay, well, price was a red candle, so my line must go at the bottom of the red candle. Okay. And that becomes my prior session's gap fill. Okay. Now, in this example, has price broken outside the prior session's high and low? Okay. So on the NASDAQ, the environment is different than it is on the S&P. Is that a true statement? Okay. So the NASDAQ is not inside the prior session's high and low. Now that means I can take breakout trades as a trading strategy, okay? And for that, I need to find a resistance or support area that has had minimum of 3 touches, okay? A touch hitting into supply or resistance, or a touch hitting into support. Hi, Maddie. Maddie, today we're just, the markets, the equity indexes are closed. So I'm doing a little bit of teaching to help students understand that are going to be viewing this video, that what are the things that Kaitlyn and I look at in the pre-market to help us understand that trading environment. Okay. All this is being recorded too. So here we have an area where we have a resistance. Okay. And we can see the price hit once. Outline that. Price came up and hit it once. Pulled back. Came back up to that same area. Was met by some more sellers. Hit a second time. Pull back. Hit a third time. Still some sellers in there. And pull back again. And then we had our fourth time that price came up into that. Now, to define a resistance or support area must be a minimum of 3 times. Okay. So here we have that resistance area. Price is already broken outside the prior session's high, okay, which we had right here. So NASDAQ is no longer an inside day. But the S&P is still an inside day. This will also help us decide on which direction to take trades. It'll help me choose which strategy to participate in, understand the trade environment, and then look up to the left or look down to the left and find my leg base group of candles. It looks like the crude oil is just in a trading range here. Much better deal over here on the 60-minute chart. So the question Scott posed, oh, dang, we missed a nice drop on the CL. Okay. Well, you haven't missed anything just yet. Okay. I mean, there's a couple of little moves. We'll come back and we'll do the crude oil in just a moment. All right, so again, from the top, I marked the sessions high and marked the sessions low, prior sessions low and high. Then for today's range, anything to the left-hand side, right-hand side of the session break is the regular, the Globex overnight high and low range, okay? Now the regular session starts right at 9:30 Eastern, okay? And at 9:30 Eastern, okay? That's when the regular trading hours. So once the regular trading hours start, we just need to see where the Globex high and the Globex low range is at, okay? So having that all marked, understanding that today is outside the prior day's trading range. Price outside prior day's trading range. Which means I can take breakout trades and be a little more aggressive in the marketplace, okay? All right, let's see, I got Dow. Maximizing my chart. Let me take off some of this information here. Mark the prior session's low. Prior session's high. Okay. Now, when you look at today's range, okay, is today's range inside the prior session's high and low? It has not broken below or above. We call that an inside day. Okay. Now we're going to take from the to the left to the right hand side of the chart from the session break. We're going to mark the lowest point. Okay, and then we're going to mark the highest point. Okay, and we can clearly see that we're inside the prior session's high. So no breakout trades on this one, but we also expect the gap to fill the same trading day. Happens in most cases. Okay, if the gap is going to fill, which direction did price need to go? Okay. Good. So see how we keep blending the pieces together. There's really no opinion about this. It's just what we've observed, put into our trading plan. Okay, and we use that information to help us anticipate the opening of the session. So with an inside day, I need to find a level of a buy territory and a sell territory that's just outside a resistance or support area. And on this time frame, I'm not seeing a whole lot of that opportunity. Let's just map this across. And what I'm looking for is how many times did price come in? Once, twice, 3 times, okay? So it is possible that most of the orders have been processed and there's going to be fewer, okay, much fewer sell orders at this level after the price has been tested so many times, okay? It needs to test this area greater than 3 times. So having said that, we're still inside. I can't take a breakout trade, although a breakout trade might be imminent. Okay. Got to have your rules. Now we are expecting a gap to fill today. So as I'm looking at the current price and I'm looking down, I'm trying to find an area where we would, and I did reduce the time frame to get the right picture. Okay. I want to get an area where price has touched several times and then just took off. An area of accumulation. I keep putting the wrong colors on it. There we go. All right, so I have a small time frame support area where prices come down several times and met that. You might have to go to a smaller time frame to get that detail. Okay. You can see across here we had 3 touches and price moved up. And this one, my leg-based group of candles is in a little different spot. Okay, but what I'm looking for is where is my support and where is my resistance areas. Okay, because I'm looking down and left and saying, wow, I'm not seeing one, not seeing one, not seeing one, where we had 3 consecutive touches that area. So if the markets do start plummeting to the downside, where would they most likely go? And would that be a trading environment that fits your trade plan? Okay. Because we still expect the gap to fill. All right. Russell. Okay. Let's clean up my chart. And you don't have to stick with the hard ones if you don't understand it or don't get it. Go to the real simple, easy one. Okay, the pictures on the price chart. Okay. All right, so here we have that red candle. So I'm putting my horizontal line at the low of that red candle. That's the prior session's close, and that's where the gap will be filled. Okay. Now, the techniques that I'm exploiting and documenting right in front of you, okay, are things that we see happening in the marketplace over and over and over again. Okay, so we have to always be willing to go down or up and find that exact picture, but always start with the easy ones. Okay. All right, so let's mark. I got the Globex low. Find all my drawing objects here. Let's mark the prior session's high. And that's always going to be between your session breaks there, the highest point. And then you're going to mark the prior session's lowest point. And we can clearly see that the Russell is inside the prior day's trading range, has not broken. Okay. So can we take breakout trades on this since it's inside the prior day's trading range, or should we not? Shouldn't take them. That's exactly right. All right, see a question over here. On these low volume days, is the time of day going to be a big factor in taking trades? Yes. Okay. The other thing that we have to worry about, Scott, is that today the stocks are not trading. Okay. When the stocks are not trading, it also creates a vacuum of liquidity. Okay. Meaning there's not enough transactions, or the stocks that make up a large part of this fund, okay, they're not producing in a manner that is going to drive futures up or futures down. Okay, so having said that, is that inside days are choppy, no breakout trades. We look for the gap fill. Okay, so we're developing strategies that we just tie directly into whether we're going to be trading today or not. Okay. So yeah, to answer your question, Scott, the stocks are not open, so they're not going to really impact the futures market. Now, the futures market can go up, it can go down, okay, but what remains to be seen is how things are balanced between cash and futures, okay? So on the futures product, or sorry, the cash product over here, which is a Dow 30, a price weighted index where everything has basically the equal weighted. We can see that we had 1, 2, 3, 4, 5, 6, 7 Dow stocks negative. And we had 1, 2, 3, 4, 5, 6, 7 positive. Okay. So when we have 7 positive, 7 negative, then we net the results. So the results is 0. Okay. So what you could say is, in a statement, does not make a trade, but in a statement, cash, which is the stocks, okay, is at 0 based on the calculation I just shared with you. Then I look over at the futures and say, man, S&P futures, wow, they're up 30 points. Okay. They're up 30 points. But the cash market is not open. And we're inside the prior day's trading range, and we're expecting the gap to fill today. Okay. If the stocks were open, we would expect that fill to be a little bit more on time. Okay. Breakout trades are often not a good sign or not a good product to be trading or investing in. Okay. See the right way. Breakout trades are not in favor on inside days. Okay. And I know I'm spending a lot of time on these. Okay. And I'm also, I see your question over here, Lou, is does time matter on crude oil, gold, and Forex? Not as much. Okay. Not as much, because those are commodities. But the pit has to be open, and the pits are closed today at this moment in time. So just as when futures open, futures like on oil as a derivative, that means the oil pits have to open up at 9 a.m. They open up at 9 a.m. Eastern, okay? But today's a bank holiday. Did the commodities and the physical market for crude oil, did it open today? If the answer is no, then what we would see is that we don't have the physical market in order to give us an additional piece of information, an odds enhancer, as to where futures will be trading. Okay, because futures always follow something, they don't lead. So without the pit session being open, the futures, and without the stocks being open, the futures are just kind of chopping and going back sideways and forward, and it's kind of amateur hour in there. Now, when the cash market is open, or physical market, in the case of crude oil, you'd have the physical oil product, okay? Is the pit open at the same time futures are? Now, this is why we do the open range breakout trade on crude oil, okay? And on crude oil, we generally map that 9 o'clock open, and we mark the Globex high, and we map the Globex low, okay? So everything is kind of in that range, okay? Now, the breakout trade, 9 a.m., the pit opens up, but not today, okay? The pit opens up and it forms the first 5-minute candle, okay? Now, we take that first 5-minute candle and we use as a trading strategy, okay? So here we had the overnight Globex high, which is the overnight extended hour session. Then we had the Globex low. Okay. Now, very often we can see that when price breaks out above or below that trading range, that first 5-minute candle, break out to the downside can be very fruitful for a trade going down to either demand or support or resistance or something else, okay? Or just the inverse for the Globex high. But right now we know the pits are closed. So taking a trade above 108.39 or below 108.05 is going to be elevated risk, okay? And because the pit is not open, we don't know where the physical market is trading at, okay? And whether futures are going to be bullish or bearish. In a nutshell, futures just follow something, they don't lead it, okay? All right, so let's start off with gold. So I'm going to clean off my chart, create, go to drawing, remove, select all, and click OK. So I'm going to come out to a 60-minute chart. This is just part of my trading plan. It may be part of yours, if you adapt it, okay? So the first thing that I'm going to look for is finding a support or finding a resistance, a really easy one, okay? So right over here, I could see the price was going sideways, came up into that area several times, okay? More than 3. Okay, so I'm using that information. Price hit sellers, found sellers, blew right through the sellers, okay? So now over on the left-hand side of the chart, first thing I'm gonna look at is finding where I have that 3 seller, or 3 buyers in this case. I'm just marking that range. I'll get the colors down in just a moment. My brain getting foggy here. All right, so on a 60-minute chart, I found some of the most obvious support and resistance areas, okay? So now I'm going to break this down just a little bit more. Let's try 30-minute. What I want to verify, the price hit, bounce out once, twice, 3, 4, 5, 6 times prices bounced off of this area as we start reducing the time frame. Now, in reducing the time frame, that time frame, I'm getting that more detailed price, okay? And right now I'm looking at this being a support area. Now, what would enable me to take the break of that support to the downside? What if I noticed that price was inside that prior day's trading range? For TradeStation users, I'm going to right click on my chart. Okay. And where's it going? Click my chart. Oh. Right click, format window, and then I'm come over to style and I want to show the session break. Okay. So same thing that we can look at on gold, okay, is we find the prior session's low. And we found the prior session's high. Is it a fair statement to say that gold is inside the prior day's trading range? Okay, and on inside day, are things a little more choppy, designed to take your money? Okay, so we know that the trading environment is going to be a little more difficult when trading gold at this point. Okay, now what time does gold open up? When does the pit open up? Anybody? Gold pits. Okay, great job, Jeff. Excellent. Okay, open up about 8:20. Okay, Eastern time. So we could do the same open range breakout type trade. Okay, here is the pit session, 8:20. Okay, we know that the gold right now is inside that prior day's trading range, and we see that the overnight low. Let me put this on as well. Okay. And then we have the Globex high and low. Okay, we've got Globex high and low. Now, if price breaks below the Globex low and prior sessions low, I may have the opportunity to take the breakout trade. Okay. So we just want to be stacking the information. I'm not going to take the breakout trade now. I'm going to wait till it breaks to lower that little channel, the area where we see the buy territory. Now I'm going to reduce the time frame a little bit more because I can see that there was resistance here, and as I noticed the resistance on these areas, okay, how many times has price used this area? Has it used it 3 times or just 2 times? Okay. So in the case of a pending resistance or pending support, okay, we want to change the color. We want to know if something's there, but we want to change the color to something neutral. Okay. So this would be the 3rd time. And this could act as a profit margin as well. Now, in the areas of support and resistance, okay, 2 touches, okay, we can use this as 3 touch. Well, we use it as 3 touches if we're going to make a trade at the breakout, okay? So as I'm putting all this information together, and we realize that price is in between resistance and support, okay? So the area in between resistance and support, this will become what we refer to as our dead space. Now, why is the dead space important? Well, first and foremost, it's important to identify Globex high and low, but also resistance and support to help us understand where our profit margin is at. We've got support level, and we have resistance. As I get my computer working right, all thumbs this morning. Okay, I'm just going to change this a little bit. So the area between resistance and support is what we refer to as the dead space. Now, the dead space also helps us calculate profit margin potential, okay? So if price bounces off support, then we're going to look for it to go back up to resistance. If it's resistance, we're looking for it to come back down to support, okay? So at this moment in time, price is at support, but we have to understand, is this support area, is it still brand new or is it been used up a little bit? Because each time prices come down into that support, it took out some of the buy orders. Came down, took out some buy orders, came down some buy orders, okay? Now, the longer that price keeps hitting that support area, the more buy orders have been taken out. So the anticipation of taking a breakout trade is going to be a higher probability, okay? And less risk once we see that price has used that whole area, okay? And used areas are just as important. Now, this area also has a little trap condition with it. Inasmuch as if I take that current price and I go down and I find that there is another level right over here where we have that resistance, and then right below that resistance before that very strong move up, okay, there is a leg base group of candles. So what we have discovered is that there is a buy territory just below the Globex low. So imagine, if you will, okay, that this, if price drops into that 1832, 1827, this is what we refer to as a trap trap condition. Okay. We also would use this information and say that if I took that breakout trade, as price is breaking that support, is there enough profit margin for me to take the risk down to that? Or would it be better suited that I wait for price to come in there and expect to bounce back up simply because of the location of this buy territory over here? Now there is another buy territory just below it. How many have traded gold before? How many have danced with the gold? Yeah, okay. Now, the personality of the gold product there, does it have a tendency to overshoot some of the best zones? You might go, yeah, I've got stopped out several times on this thing. It's just, you know, I don't like gold because it stops me out. My zones are, you know, we have to understand that certain products are going to have a little more liquidity to them. So the areas will be a little more respected. But gold is more of a thinly traded product, at least these gold futures. So there has a tendency of overshooting some of the zones. Okay, same as natural gas. Excellent, Scott. Okay. Yeah, we've all been burned on natural gas. Figuratively and yes, anyways, in actual trades. So as we are observing the Globex high, the Globex low, and we understand the prior sessions high and low, okay, we see that today's price action right now is inside the high and low, choppier conditions. Breakout trades are going to be elevated risk. Okay, so taking a breakout as it's breaking the prior sessions low, that's a little different. We have a little less risk, okay, rather than being in the middle of the range and taking a breakout. Okay. We've also understood that in using this and having the dead space here, what could realistically happen, okay, is that price drops right down into that trap condition. Then it starts bouncing around like it's going to make a drop and then base and continue to drop lower, okay? So it starts making that base action. Now, if there are 3 touches, and here where you could take a breakout trade, since it's already broke the prior sessions low, my expectations as far as profit margin to the upside that price would go all the way back up to the other side into that resistance area, okay? In the dead space, price often moves up or down through that in the direction of the higher time frame trend, okay? So this trap condition could potentially turn into a very nice trade, okay? But we understand that there's not enough profit potential to the opposing zone. When there is not enough profit potential, okay, to the other zone, we must understand that that risk is elevated to take that trade. Now, you still could make that, but if you manage expectations based on the information I'm sharing with you here, you will also be more prepared for how to take action when price arrives at a buy territory or sell territory, okay? And all of these things that I'm teaching you right now are mechanical, can be verified, drawn out on your price chart, but we have to understand and put the conditions of how we would take a trade around this. Now, Daniel and I trade gold quite a bit, and we watch it and observe it, as many of you have as well, okay? We've also noticed that some of the bigger swings in price on gold happen earlier in the session, right at the time the gold pits open up and the gold futures come together, okay? And there's just a certain period of time where gold is more liquid, has more volume, and then the volume kind of drops off, okay? Now, the more liquidity that is there or higher volume, the more that our buy territories and sell territories are going to be more respected at that point, okay? How are we doing on the S&P? Okay. And just as a quick review, we see that the S&P is trading right now, but stocks are closed. So the S&P does not have a really good bearing as far as, I mean, it's just like an overnight or Globex session, even though today, this time, the regular session is going, but the stocks are closed. Taking breakout trades are going to be elevated risk. And since we're inside the prior day's trading range, we're expecting the gap to fill. Okay. You see how we're using, and this is just one part of what, the amount of work that Kaitlyn and I do in the morning to prepare the students to, because as students, you're looking for the trade. You're looking for our experience to help guide you. Okay. But as you start to grow and start to expand your knowledge, you're going to start asking the question why, instead of just like waiting for somebody to tell you, yeah, get in now or get out now. Okay. You're going to say, well, how do I make this work on my own? Now, as brand new traders, you kind of want to be spoon fed in order to recover potential drawdown or losses. Okay. Or even cost of education. How do I get my money back? Okay. This type of information that I'm sharing with you right now and the live trading room can help you recover your tuition costs. But after you get your tuition costs recovered and you start focusing on how you're going to make trades on your own, okay, these pre-market routine little exercises that I'm demonstrating right now will help you understand that trading environment, okay? So as we look at the NASDAQ was outside the prior day's trading range. Okay, it's broken. So we can take a breakout trade on that. And we are not expecting the gap to fill the same trading day. Is it possible that some of the information that we're collecting, okay, on these equity indexes, I'll have my dashboard up here, okay, is that on the Dow and the S&P, which are still inside the prior day's trading range, we are expecting the gap to fill or price to come down and fill the gap. But on the NQ, we're not. Okay. And also on the Russell, we're expecting the gap to fill because it has those parameters. Okay. This inside day. So this helps me choose the products that are going to be more productive for my style of trading. I like that, Daniel. Going up, going down, going up, going down. Now, part of the psychology around understanding this, and this comes with maturity in the market, little longevity, it occurs with proper training and understanding of why price moves and understanding which trading strategy that we should employ, okay? No breakout trades during an inside day, because they often fail. But having said that, there can be an opportunity to take a trade in a sell territory or buy territory, okay? I'll teach you the other part, but that's where I was going just more. I want to keep it more specific at this point, okay? Almost got sidetracked and bringing something else into it. So now that we have our sell territories and buy territories marked, we understand that we're inside the prior day's trading range. We understand the market conditions. We also understand that when we measure the Globex high and low, to take a trap, or when we analyze what we call a Globex trap, okay, is that we look for the distance between the Globex high and low to be greater than 75% of the daily average true range. Okay, so this only becomes a trap trading strategy if we have in the overnight session covered 75% of the range of the daily. Now, the range over here is about 104. So that would mean that the Globex high and low range, in order to participate in a trap strategy, would have to be about 75 points. Okay, so we're only got about 50% of that range. So the Globex trap is not the main focus or main play. Question from Jeff. So Jeff, for example, on the S&P, okay, you keep from you where it is an inside day. Does that keep you from taking breakouts on the NQ? No. Okay. See, the NQ has a different rhythm than the S&P and the Dow. You got the NASDAQ exchange, which is more growth oriented, volatile type stocks, where we have value related type products on the S&P and Dow. Okay. Now, what that simply means is that when we have a growth oriented type products, which are more listed on the NASDAQ exchange, okay, they're younger and we get paid on the value of the fluctuation in price, okay, for the most part. With a value oriented company, we get paid a lot of times dividends and price movement of the stock, depending on the style of trading you're doing. But the value related companies are the big, well-founded companies that have been around for a long period of time. They're stable, comfortable. Banks and institutions participate in them every day. The volume is higher. Because of the banks and institutions' participation, there's safety in the price movements and more reliability in the buy territories and sell territories. Okay. We get less of them overshooting their ranges of the buy territory and sell territory. Whereas growth-oriented companies tend to be a little more volatile, a little bit more in the news, a little more dramatic because of and that volatility can cause or become a little extra risk at time to time. Great question, Jeff. But as we're looking at this, there's no breakout trades on the S&P, but it is possible on the NASDAQ, I do have a breakout trade potential, okay? So we use that information to choose the product that we're going to trade. If you are a type of trader that likes taking the breakout trades, they make you feel more comfortable, okay? Then you would not be trading the S&P, you would not be trading the Dow, you would not be trading the Russell until it breaks out of the prior session's high and low. You would not be taking breakout trades, okay? But the NASDAQ is outside of that range, so breakout trades could be taken. Now, and I would be prepared for that. And so I'd start breaking this time frame down. Let's drop down to a 5-minute chart. Okay, and marking using the details here, I'm finding a support area. And we found a resistance. So on the NQ, as far as a trade opportunity, I could look for price breaking above that high point and taking a long above that. Then I would go up and left and look for a sell territory that's on the other side of that, which is still fairly far distance away. Okay. And if I now have this support area here, I would also use that horizontal line and mark the low of that range. And I could take a trade going short when it breaks 11,328. I could take a trade going long when it breaks above 11,402. Okay, for breakout trade. Now, the breakout trade here to the downside, I need to look down and find the leg base group of candles in that range. Okay. And I may mark that range over here as that leg base group of candles to find that we have a little buy territory in that area. Okay. Now I'll save the teaching you the leg base. Most of you are already aware of that. But if you're just observing this video, and you're wondering what's the leg base, refer to our website. Okay, and you can get some 90-minute lessons on and teaching you what that is. So that's why I circle those areas. Now, in identifying that Globex low, prior session gap fill, okay, we could take the breakout. We see that there's very little profit margin here. Also, I realize that this is also a potential area where we might even anticipate a breakout to the downside. Okay, another support area, which is information that I should not overlook. But this support area has only been used twice, and I would need to see it touch a third time before taking a breakout and going to the other side of it. Okay. So what I've started to do in this is understanding that 2 touches does not match my trade plan for a breakout. I must have 3 touches of a resistance or 3 touches of a support in order to take a breakout trade. If there's only 2 touches, then chances are pretty high that we are going to get a bounce. Approximately 78% of the time, price will bounce off of these levels, okay, rather than just go right through them. Okay, so 3 out of 4 times you have to anticipate the bounce, okay, off of a support or resistance area. Okay. A lot of information being covered here today, and this is just one portion of what we do. Okay. So let's come back out to the S&P. I see that we have a sell territory, 37.19, 37.33. Okay, so I'm going to bring up my sell territory, 3719, 3733. Okay, that's my sell territory. That's what I have mapped out there. Now, to the downside, taking current price and going down and left, we found we have a buy territory down below, 3636 and 3616. Okay, and we just map those out. Okay, I know some of you are going to click that button right when it breaks that Globex high. I'm going to caution you not to, because you're trading in the overnight session, basically. Okay, the stocks are not there to support it. For the NQ, our sell territory is way up on top. Okay, and we qualified that by finding where price had base sideways and then broke to the downside. You have to go to a smaller time frame to appreciate that support area. And you also have to look at the larger time frame to see why that works so well to get that kind of waterfall effect. Okay. I have a buy territory near 11,000, 10,942. I have a sell territory up 11,692 and 11,724. Could I include this one? 11,304, 11,274. Would it be the third time we touch that area? Would it be elevated risk? Okay. These are the questions that I'm going to start putting out to you to help you understand when to be a little more aggressive on taking your trades and when to be a little bit more conservative. All right, so in the NQ, sell territory, 11,692, 11,724. And you can add the decimal points in there too if you want to get round to the nearest whole point. It's okay. This one would be like 0.75, which would be a quarter point. 11,692. Since we're at 11, I'd probably keep that right at the 0. Okay. Remember, on the NQ, it trades in 25-cent increments. So 0, 25, 50, 75, back to 0. So I'm going to include this little area for a short-term trade. Okay. which is going to be 11,328, 11,274.5. Okay. Now, Kaitlyn does some really good things in here by putting little asterisks around it to see if that was a zone that was created. Let me bring that to your attention. Okay. We have a buy territory zone, and we see that that zone, was it created during the regular trading hours or the overnight extended hours? Now, these are other pieces of information. If this zone was created during the overnight or extended hours, does it usually have enough volume and enough institutional participation in order to support that area? Okay. And these are things you want to bring up in your thought process. Was that buy territory zone created on heavy volume? Or was it very light volume? Okay. Now, when we know it's with very heavy volume during the regular trading hours, this can be a higher probability zone. Okay. Meaning there's more institutional participation, safety. Okay. If it was created in the overnight or extended hours on very light volume, then chances are it is not as strong as a zone, a strong buy territory that's going to give us a big trade out of it. Now, we do have traders that are just looking for small bounces off of a buy territory or a sell territory. That satisfies their needs. If you want to stay in trades longer, then you have to choose the zones and have more odds enhancers around them. Okay. We have the NASDAQ mapped out. And we recognize that price is broken outside the range of the prior day's trading range. So we could take a breakout to the upside or to the downside. But since the S&P has not broken the high or low of the prior session's range, we refrain from taking breakout trades. We look to take trades that are going into a sell territory or a buy territory for safety. Okay. Coming over to the Dow. Okay. I have a zone that I had to go way back 2021, February. And this is the most close zone that I have at this point. And then we need to go up and left and find our sell territory. And looks like I have another one right up close. In this range. Okay. And I'll come back and examine that in just a moment. Now, for this lesson, I'm not going to go into a lot of the pocket of points and that we'll save that for a later date. Okay. But I do need to examine this area up on top and find my leg base group of candles in order for me to have my sell territory in that range. Okay. To help me speed up the process, I'm going to put use a C doji tool, which just means in the leg base group of candles, we have a leg candle, body greater than 50% range, and a base candle where the body is less than 50% range. So every candle that has a dot on it is a body where the body of that candle is less than 50% of the range. Okay. Now, I have the area, I have that support area that I'm looking at, okay, which is giving me the location. So as I'm starting off on this 20-minute chart, okay, a bigger time frame, due to that support area, I'm now pinpointing, and we made a lower high before price broke out of that range, okay. I'm now going to start to pinpoint that lower range right there, looking for the leg base group of candles. Kind of like a bullseye, we start on the outside and start going in on a smaller time frame. So dropping down to a 19-minute chart, I'm looking for a leg in, a base, leg out, and a base. So I don't see it on a 19, drop down to an 18. 17. 16. As we're dropping down in time frame, we're still looking in that inner circle right there for that leg base group of candles. Once we have it, we can mark our sell territory with an entry line and a stop line. It's not the time frame that matters. It's what the picture on the price chart. This is why I'm going down 1 minute at a time, looking inside that inner circle for the leg base group of candles. There we have it. Okay. So if you're brand new to this, place a vertical line on the leg in, place a vertical line on the leg out. In between the leg in and leg out, there must be only base candles, body less than 50% of the range. The first base candle's body after the leg out is where we place the entry line, and the stop loss line will go to the highest wick, tail, or shadow of the leg in, base, leg out. Okay. Now, some of you have seen this one right up on top. Why did I choose the one closer? Well, what you will learn in mastering the charts, okay, is that when we have that support area, okay, and we have price bouncing off of that support, taking out more of the buy orders each time it does, is it just prior to that breakout or breakdown, which we can see right in this area here, after price has touched that area, we want to determine, did price make a higher high before the breakout, or did it make a lower high? Okay. In this example, we can see that price made a lower high. Well, very often you will see that price, we will find our leg base group of candles at this lower point before the breakout. Okay. In an example where we make a higher high before price takes out that support, okay, very often the leg base group of candles is in the top portion of this, not closer to the breakout. Okay. Now, these are very subtle things that we get into much greater detail in our class, which is the mastering the charts. So whether we make a lower high or higher high prior to price breaking down, okay, that helps us focus statistic wise on which areas where we find the leg base group of candles have been most reliable. Okay. So now that I found my leg base group of candles, I go right back out to the 20-minute chart. And I can take the little blue dots off so they don't make a lot of distraction. Okay. So we tuned in, we scoped in and found that sell territory. And now we have a range up here to where we can anticipate there still may be some sellers yet. Okay. Now, as we take current price and look down and left, okay, we had to go all the way back down to February to find a fresh, high quality zone. Okay. Now, taking this current price and looking down, let's drop down to a 5-minute chart and let's see if there's anything inside of this range that we can use. All right, we're getting close to, and today I'm on the simulator, okay? So I'm going to take a simulated trade during these market conditions, and you can see that price is now just breaking out, okay? The price broke out. I'm going to use that last little high right there. Rejected. Hold on 1 second. some simulated count. Hold on. What did I just make a mistake on? I was thinking I was on the NQ, but I'm not, am I? Well, I just recently closed down a couple of my other futures accounts and funding some other things. So this is not. So am I supposed to be taking a breakout trade on the Dow? Or is the Dow still inside the prior day's trading range? Thanks, Chris. So these are common little mistakes, okay? And we have to anticipate that we may make some as well. Our desire to make a trade is pretty strong. And sometimes we're jumping in to make a trade because all the information is there, but then we don't realize that we're inside the prior day's trading range, okay? So I'll refrain from taking that trade, but we'll monitor it to see how it plays out, okay? It'll take a moment to reload that. But let's come back and look at the NQ. Is the NQ in a place where I can take a breakout trade yet? No, it's got to break above 11,402, okay? So while we're waiting for that data to come into play, we see that the breakout trade on the NQ to the upside. And we're going to take a breakout trade to the downside. Okay. So how do we put this on our prep screen? Well, on our prep screen, we have an opportunity, we have some breakout trade opportunities. Okay. So breakout trade opportunities for the NQ. This recognizes the NQ. We're going long. The breakout trade is now 11,402. Okay. And breakout in this case, for example, we have a breakout trade potential to the downside as well. Okay. On the NQ, let's just make sure that we're on the right one. And then that one's going to be 11,328. I'm just going to highlight that one, change the color on that. And let's make the font just a little bit bigger. All right, so we got two breakout trades here. Now we don't have breakout trades on the other equity indexes, only on the NQ. Okay. Almost got myself caught on that one. Okay. All right, so we have now found a sell territory and we have a buy territory on the Dow. So let's fill those in. Dow 3,000 or 30,764. 30,868. 30,764. Okay, and we have a buy territory down below. 29,542 and 29,357. Okay. Lou says, oh, sorry, let's see, Daniel says, save all the day events for when we have some action. There you go, like Friday, great. Lou says, with the strong trend, or with the trend is up, there's more risk on a breakout trade short. Absolutely, okay. Now, bringing trend into your analysis, okay, we use a higher time frame trend, okay, or higher time frame to assess trend So let's just jump out to 120-minute chart. And we could see that the trend is very obviously short. Okay. So, the trend is down. In a downtrend, it's more favored to take trades in the direction of the trend. So taking trades breakout to the downside, or taking trades from a sell territory going down to the buy territory would be more favored. Okay. Great job on that. That's just an additional piece of information that we could incorporate into our trading plan and say, trading with the trend is a much better, higher probability trade outcome. Okay. All right. So let's continue with the Russell. So on the Russell, we're still inside the prior day's trading range. With the Russell, we can still verify on a small time frame here that prices met resistance several times. Okay, we can see that the sellers have stepped in and pushed price down many times at this area. But since we're inside the prior day's trading range, taking breakout trades are going to be elevated risk. Okay. I can see the prices bounced right here and bounced right in here. Okay, so I'm going to continue to go a little smaller time frame. And you can drop down to 9, you go to 8. Okay. I'm going to drop down to a 5-minute chart just so I can get a very clear picture of where we have a potential support or resistance area. Taking just a moment for my data to load up. All right, so as I'm looking down, I want to find these areas where price is kind of based sideways, okay? And once it's based sideways, I want to look and see how many times price has bounced off of that area. Now I'm going to use the boxes in that area. And you want to turn the time frame down or up enough to get that level of detail where you can see very clearly the price has bounced off of that area, not once, not twice, but 3 times or more. Okay. Now you're going to have to use a little bit of you're going to have to determine, did price bounce off there 3 times or did it bounce off there twice? Okay. I can give you some of the parameters that I look for, which are using the pivot points. Okay. Now here I can see price once, twice, 3 times. Okay. And at this moment, okay, the breakout trade would be to the downside off of that range. Okay, now I'm going to continue looking a little lower, and I can see this area right here has only 2 touches. Okay. Now 2 touches is okay because they can help us with profit margin potential. But we do need to change the color so that we're not looking to take a breakout trade there. We're expecting price to bounce off of this area a 3rd time. Okay. In order to take a breakout trade going lower here, I would have to see 3 touches. I have 2 touches, which then could give me a profit potential. If I was taking a trade short, I would look for some buy orders still to be left over down at this area. Okay. All right, now let's go back out to the 20-minute chart. In order to take this breakout trade at 1,673, price must break outside of the prior session's high in order for it to become active. Okay, are you following along with that? Okay. Until price breaks above the prior session's high or low, there's no breakout trades. But if price breaks outside of the prior session's range, then comes back down, I would have the breakout trade potential. Do you see how much work is going into understanding just our equity indexes? How much work is going into sticking to our trade strategy because of this type of environment? Now, we know that the markets are not open today, and that things are most likely going to be choppy sideways action. So, and inside the prior sessions range, there's not a lot we can do, okay, until price breaks out of the range, and we can have some more active type trading, okay. Now, as I look down and left, I see that this area where I have a support, but not a third touch. So any place that I have the green or the red boxes is a resistance or support that has been tested 3 times or more. If it's only 2 times, then I'll use a different color to alert me that these may be places where I can take a potential profit. But as we observe this and the information that we're looking to get off of this, okay, is that we have a sell territory on the Russell, 16.96, and it trades in 10-cent increments, 1696, okay, 0.40. And then we're looking at 17,003, let's just go 1700, excuse me, and 4, okay? We have a buy territory down below, 1645.70 and 1641.70. So now we have a breakout trade Russell. Let's just call it RTY. You can also use the M2K. Breakout trade negative would be at 1673.60. Now, what note could I put on here? Could I put something like HR? Could I put like high risk? Okay. Okay, and why would it be a high risk? Well, we could put inside day. Okay. Yeah, inside day, no volume. Okay. Again, the information that Jeff said so, Kaitlyn said so. No, that doesn't satisfy. It never did when we were kids, right? Why can't we do that? Well, I said so. Oh, come on. We debated that. We all remember it, and our kids still do it to us today. So things that we have accomplished in this 2 hours, okay, is that we found our index futures, buy territories and sell territories. We understood the trading environment. Okay, the trading environment inside day. Remind ourselves, choppy. We'll take my money. Higher risk. Could we also add non-trending? All of these little words that I just dropped in there kind of throw up little red flags, okay? Saying, wow, traffic is not stopped, but the crosswalk says walk. Well, do you just jump right into the street, or do you wait for things to settle down, okay? We also discovered that today is a holiday, okay? Banks' equity indexes are closed, okay? Or the stocks are closed. And we may have a shortened trading day on the futures, okay? Because the world markets are still trading, but when the US capital markets are closed, there's really no bearing to see if we're overbought, oversold. Okay, there's no direction. Okay. Now we could take some time and go out to check the news, the economic reports, but I've come to the end of my session to put out there. Okay. So with what we're doing right now, this is just one part of our pre-market routine. I wanted to give you a glimpse into all the work that Kaitlyn and I put in to help make sure that our students are safe when we are posting potential areas where we might find some high probability trade setups. Okay. And as we keep putting this information together, we will start to understand when the trading environment is very productive to stay in trades longer, which is another one of our 90-minute sessions there, okay, and when to take shorter term trades, okay? There's so much preparation ahead of time using our pre-market routine. And I do want to bring you guys out to the website just for a moment, okay? Because part of this, I'm going to post out there on YouTube for people to view and understand us here at the Elite Trade and what Kaitlyn and I do in putting these things together. Okay, so let me take you out to the Elite Trade website. I want to point out a couple of things here. In order to get past the front, you're going to have to register, okay, log in. But for some of you that want to kick the tires and understand a little bit more, click on our products. And one of the products that we have are the 90-minute recorded lessons, okay? The 90-minute recorded lessons is we have several different topics. They're all 90 minutes. I think that's about $100 to go to end. We have active income. We have how to stay in getting in and out of trades. Like we covered that today, staying in trades longer, okay, trading futures on a budget, pre-market routine and prep. So just a small part of what I covered today, okay, what I covered today, which is a small part of what is in this 90-minute session, giving you a full look into everything that Kaitlyn does to outline our trading session so that the students are prepared in order to not be trading against trends, not to be over trading, taking breakout trades when the market's open just because they want to make a trade and such, okay? And there's several other smaller little lessons. Now, of course, these are little lessons. To get the full meal deal, so to speak, you would come out and you would be looking for mastering the charts. Now, mastering the charts is 3 full days where we break down all the pieces. On Monday, we usually have the classes Saturday and Sunday in order to get the information into you. And then Monday, we apply it. So Saturday and Sunday, we teach you what is a leg base. We teach you, what are trends, what are pivot points. We really build a solid foundation of what we teach, okay? And then we go to the application side of it. Now, the application side of it is exactly what you've seen right here. This is the pre-market routine. We're getting now down to business. We're learning to understand the trading environment and put these pieces together to say, is this a good trading environment today or is it not a good trading environment? Okay. Being that it's a bank holiday, okay, here we have Russell breaking out to the upside, okay, on the small time frame. We already know now that since we're inside the prior day's trading range, that the breakout trades are going to be elevated risk, okay? The only breakout trade that we would potentially be invited to participate in would be over here on the NQ, which has broken outside the prior day's trading range. And having said that, looking at the NQ, we're still pretty far away. Now, and one more additional odds enhancer, and I'll wrap up this session by doing a quick little summary, okay? Is that anytime we look to take a breakout trade, okay, we must have the leg base group of candles before the breakout, okay? Now, having that leg base group of candles prior to the breakout entry, okay, is going to allow us a place where we can visualize the amount of risk to take on a breakout trade. For example, I'll put the little blue dots back on here. For example, we have the leg in, we have the base, and we have a leg out. We always want, as we're training the eyes, we're going to put a vertical line on the leg in, and we want to put a vertical line on the leg out. In between the leg in and leg out can be only base candles, okay? So in this example, okay, we're looking for the next base candle in order to isolate the group of candles we use as where we have very often seen price change direction, okay? What this will tell me now, and I'm making an assumption at this moment, let's just say this does become a base candle, okay, where the body is less than 50% of range, and right now it's going to take a few more minutes for it to complete, okay? If it is, at this moment in time, is going to be the stop loss line, okay? This is where I'll be placing my stop, okay? So when we start looking at that and say, okay, well, my stop has to be here, and my entry for a breakout is up here. How much risk will I incur? Wow, that's 33 points on the Dow, or the, sorry, on the NQ. Now, that risk is outside of my trade plan. Can't risk that much, okay? But you realize that the risk is almost 33 points. It is not your trade to take the breakout trade. So in understanding price patterns, you'll learn a lot more of this when we get into the 3-day class, okay? Is that when we have, then I'm just going to illustrate the picture here. Okay? When we have that resistance area, which is highlighted with the red box down here, okay, is this is an area where sellers outnumber the buyers, okay? And we call that resistance. Now, the implied is that there's more sell tickets, or the sellers have been coming in at that price. And we could tell that there were more sell tickets than buy tickets because price went down. It did not go above that area, okay? Prior to price moving through that area, the breakout trade, okay? So the breakout trade must have a minimum of 3 touches looking for the breakout to the upside. Now, breakout trades, also before that breakout, we have to understand, where do we make a lower low or a higher low, where our buy territory is most often going to be located, making a lower low closer to the pivot point, higher low closer to the breakout point, okay? But as we look in that area and we find the leg base group of candles, it must be there before the breakout, must be there in order to take that breakout trade. The lower that range now becomes, oops, that's not what I'm gonna do. There we go. All of this information must be in place before taking the breakout trade, okay? Now, if we are coming back down to this area and anticipating there still may be some more unfilled orders, okay? Price dropping down into this range, if there still remains more buy tickets than sell tickets, then we will see price change direction, okay? So if the risk is too large for me to take the breakout trade, okay? Then I must visualize and wait for that breakout trade to have occurred, price breaking outside that range, and then price returning back down to this range. So whereas I have 33-point risk on the breakout trade, on a buy territory trade, using the leg base group of candles to isolate that zone. Okay. So I have 33-point risk to take the breakout trade right now, currently, okay? And to take a trade coming back to the buy territory, my risk is greatly reduced to about 15 points. I reduced my risk by half, okay? Now, to reduce the risk even further, you would need to get into the Mastering of the Charts course. I'll give you a brief example. When we look at the leg base group of candles, we look to see that that leg candle inside the zone, we compare it to the leg candles leaving the zone, okay? So in brief, if the leg candle inside the zone is smaller than the leg candles leaving the zone, price often goes a little deeper into that zone where we can minimize risk even more. The second variation of that is that the leg candles leaving the zone are smaller than the leg candle in the zone, okay? Then that zone can only be used once, and it is always a entry line zone, or using the entry line, we would have that almost 16-point risk on the trade, okay? There's a lot to cover here. How have you guys enjoyed this session today? You guys like it? Okay. For some of you, this is more of a review, okay? That you've already been to Mastering the Charts, okay? We must have a very specific plan to assess the market conditions. And what I've covered today is just a very small part of all the pieces that we put together, okay? In our live trading room, Kaitlyn gets up very early, I get up very early, and we start putting these pieces of information together to help our students in the live trading room become more profitable, okay? Have a good and great understanding of why we choose to take trades in a certain direction, why we choose to take a breakout trade versus a buy territory or sell territory, okay? There's much more to that, and I've already gone out and shown you on the website where to find the information. You just have to click on our products and you can look through the products. Live trading room, if you just want to participate, get an understanding that, and we have all the recordings that will be available, okay? Now, today the market is closed, so the recording for this session, if you're already part of the live trading room, will be in the live trading room recordings, okay? I'm also going to make this recording available on YouTube so people can come in and evaluate what we do here at the Elite Trade, okay? You can also come down and find the 90-minute recorded lessons. There are if you want to get a little more detail, a lot more detail into the topics of an inside day, outside day, how we do our pre-market routine, and so on, then start looking through the 90-minute recordings and see which ones apply to what your needs are, okay? If you're brand new to being on the Elite Trade, come out here and get much more detail on what is Mastering the Charts, okay? The Mastering the Charts is 3 full days. We go from 9 a.m. to 4 p.m. Eastern time, Saturday and Sunday. We have breaks, of course, in between. It's very, very interactive, a lot of quizzes, a lot of tests along the way to help really refine and get those details down, okay, of what makes a good trade, okay? So in this, we do provide, in the Mastering the Charts, we provide a workbook. We also provide homework and follow through, okay? And love to have you join up for that, okay? Yeah, this will be bumped out, okay? We've had some other things that have kind of set back as far as some personal matters that we have to take care of. So this is not happening in 4 days. Refer to this, get the updated next class that's coming out. If you want to participate in this beforehand, okay, you can sign up for the class and you could get the recorded one that we already have, okay? If you want to attend a live one, okay? And what I'll reach out and say right now is if you want to attend a live one, then you would need to attend the live one where you could be a little more active. Those dates will be set out there in the next day or two, okay? So I hope you guys have enjoyed the presentation, looked over a few things, understood risk taking a breakout trade when you use the leg-based group of candles. That must be there before taking a breakout, okay, to assess the risk for the breakout trade, okay? If you're using the leg-based group of candles, the zone, the risk can be less. And understanding those little subtleties about the zone can help you prepare to take the trade deeper in the zone or at the upper part of it, okay? Really cool stuff, very detailed, very methodic. And usually Thursday, Friday, well, Thursdays more than Fridays, in the Discord group, we have Daniel that helps us in the Discord group, and we'll give a shout out to Daniel that, you know, in assembling that and putting everything together for everybody in the Discord group and being very supportive and helping back me up too, okay? Is we use some of the tick charts so that we can observe these price patterns. We can observe things happening right in front of us. Now, we might choose to trade the S&P or the NASDAQ or the Dow, and we start showing you that on a tick chart, very small time frame, that the same patterns, processes, and step-by-step approach is still in play, okay? So I hope you've enjoyed this presentation. Thank you all for joining me today. I mean, it was really kind of just a lesson day that we have inside days. Most of you know my personality or know that Kaitlyn and myself both, we do tend to go more into a teaching mode rather than a trading mode when we are inside the prior day's trading range. Rightfully so, to keep our students safe and also to teach you these things, review them so that we understand that certain environments are not as productive as other environments, and we want to be on the right side of a productive trade, okay? All right, I'm gonna wrap up this session today. Daniel, thanks for being in here and supporting, and also supporting our Discord group. And if you're not part of our Discord group, get involved in that by being part of the live trading room. And we look forward to seeing you guys tomorrow morning when we have everything set up and ready to go. Have a great day. You already have your prep screen. Our breakout trades on the NQ are posted, okay? Our buy territories and sell territories are posted here. It's gonna be a lot of waiting today, okay? For prices to get to these other areas. Have a great day, everybody. And thanks for joining us.